What is accounts receivable? Have you ever wondered what accounts receivable means in the world of business? Today we're going to break it down simply and clearly. Accounts receivable, often abbreviated as AR, refers to the money a business is owed by its customers for goods or services that have already been provided but not yet paid for. When a business makes a sale on credit, it sends an invoice to the customer. That amount becomes accounts receivable until the customer pays the invoice in full. For example, imagine a company that offers graphic design services. Once the project is completed, the company sends an invoice for $2,000. That $2,000 now sits in accounts receivable until the client pays it. Accounts receivable is crucial for businesses because it represents future cash flow. Timely collection ensures a business has the working capital it needs to operate smoothly. In summary, accounts receivable represents money owed to a business. It's a vital part of managing cash flow and ensuring a healthy financial operation. Want to learn more about managing your business finances? Subscribe and stay tuned for more insightful videos.